Merrill Strachan with TN3B Financial here with some breaking news. We are here in the second week in April right now. We are at the beginning of the second quarter, and news out of Wall Street is not good. The inflation report came in and it just hammered Wall Street for failing to get inflation under control. Now, as inflation goes up, we know what happens. The Fed steps in, they raise interest rates, trying to bring inflation down and try to get the economy under control. And so that's something we can expect to see in the coming weeks. As a matter of fact, we've already seen it in these past few weeks. It was only a few weeks ago, I was telling you, 5.5% interest rate, and we're going to see a buying frenzy. Well, we saw the FHA rate dip down below 6%, down to about 5.9. Well, you know what? It's back up again. And there's a good possibility the Fed's going to raise rates again. All right. And so right now, you need to understand, though, there is a lot of pent-up demand in the real estate market. People need to buy homes. That's what it comes down to. They need to. We're not saying, oh, people I want to go get something bigger, or, oh, it would be nice if. There are people who need to move. They need a bigger home. Their families have grown. They've outgrown where they are. They need to buy. There are some people who are at that point where they need to downsize. They've got too big of a home and the cost to maintain it is too much for them, and they need to downsize. Some people need to buy a new home because of a job transfer or the like. People need to relocate for work. And so these are the things that we're dealing with in this market right now, that regardless of the interest rate, people need to buy homes, and you can help them. Okay. Interest rates, it's not stopping some of these people. I have a client who recently listed a home that he had refurbed, put it on the market. I think it lasted 2 days max, and he was already had the property under contract. So there is tremendous demand out there. Okay, so are we going to see interest rates go up? Yeah, I actually think we are. Right now, the bank prime rate is sitting right around 8.5%. So what does this all mean for you? Well, I'm going to share with you some information that I've been seeing. I want to point some things out to you. Everything that I'm going to be talking to you about, these are my opinions, my analysis of it all. And so I want to be very clear about that. So I created a slide deck for you that I want to share with you right now. And so I'm going to bring that up, and then we'll continue with this breaking news and how it can impact you. Okay, so this is our breaking news update from me, Merrill Strachan of TN3B Financial. And let's advance this. There we go. First off, we got to do the disclaimer because I'm going to be sharing my opinions with you. Past performance is not an indicator of any future results. All investments contain risk and may lose value. Any historical returns, target returns, expected returns, or probability projections may not reflect actual performance, future performance. Investors should not rely on forward-looking statements because such statements are inherently uncertain and involve risk. While the data we use from third parties is believed to be reliable, we cannot ensure the accuracy or completeness of the data provided by investors or other third parties. We do not make any representations as to the accuracy or completeness of the information contained on this presentation and undertake no obligation to update the information. Neither TN3B Financial LLC nor any of its affiliates or registered investment advisors are broker-dealers and do not provide investment advice. No communication from TN3B Financial LLC or its affiliates through this website or any other materials is intended to be or should be construed as investment, tax, financial, accounting, or legal advice. There is no assurance that any strategies will succeed or that any program will meet its investment objectives. So, as the saying goes, don't put all your eggs in one basket. The key to successful investing is to diversify. You want to spread things out into multiple baskets, and in today's terms, each basket where you place your investment money is called an asset class. All right. They say don't put your eggs in one basket because if you drop that basket, all the eggs are broken. If you invest all your money into one spot and the market turns, then you've got some big problems there. Okay. So let's talk about some asset classes. There are four main types of asset classes. There is cash. This is the money you have in the coffee can buried in the backyard. This is the money you have stuffed underneath your mattress. This is the money you have in your checking and savings account. This is the money that you have in your CDs. That's cash. That's that asset class of cash. Then we have fixed income securities. These are bonds. Bonds are normally government issued. So you've got muni bonds, you've got federal US savings bonds, and the like. Bonds are a great investment because when you invest in municipal bonds and the like, the money you earn from them can be tax-free income. So it's a pretty neat class to invest in. And then we have equities. Equities, these are your stocks and your mutual funds that you're investing into the stock market. And then we have property, which is real, tangible real estate, the house that you live in, your investment properties, your rental properties, your fix and flips. That's you investing in real estate. Those are the four main asset classes when it comes to investing. There's a true balancing act in deciding where to place all of your wealth. You've got these four main asset classes. How much should you keep in cash? How much should be in bonds? How much should be in equities? How much should be in property? And that's going to be something that you need to determine through your own research and in discussing things with your financial advisor. But it is generally considered to be important to have your money spread out into all four of these asset classes to truly have a balanced portfolio. And what that does is when one area takes a hit, the other areas that are excelling can then actually balance it out so you do not come across any catastrophic losses and dump you into a financial crisis. The problem is where to diversify your wealth and what truly is diversification. Your Wall Street investment experts will try to convince you that it is possible to diversify your portfolio by solely having a mixture of small cap stocks, large cap stocks, emerging stocks, and international stocks. They'll tell you, hey, let's get into this mutual fund here because it's really diversified. However, what you're investing in is all in one asset class. So where your 401k is going right now, where your IRA is going right now, if you have all that stuff into mutual funds, you're only in one asset class. And what's going to happen? That asset class being the stock market. What's going to happen when the market goes down? They're all going to go down. Now, granted, when the market goes up, we get a good run on the market, they're all going to go up as well. But you're putting all of your eggs in one basket if that's the way you're handling your investing. So what are the key differences between these types of investments? Well, first, let's look at cash. Cash, again, the money in the coffee can. It's there. The money in the mattress, it's there. The money that you have in your bank account, in your checking account, your savings account, your CDs, those are all insured by the FDIC up to $250,000. But if you have multiple accounts at that bank, you are an account holder and all of it combined is insured up to $250,000. Little known fact, the FDIC right now currently has about 1% in funds to cover all the deposits. They only hold a reserve of about 1% to cover all the deposits in the banks. You're not going to earn any interest on your money if it's in a coffee can. You're not going to earn any interest on your money if it's stuffed between the mattresses or in that wall safe in your living room behind your Renoir. Okay. You're not earning any interest. You're not getting any gains from that money. The money that you do have in your savings account, if it's earning interest, it's very, very meager interest, much lower than the rate of inflation. And therefore, your money sitting there, its buying power gets less and less the longer it stays there. Okay. And as far as having assets, you've got cash. And that cash, some people believe our US economy, our cash, US currency, it's not backed by anything. It's a fiat currency. It only has value because we believe that it has value. So we're not on the gold standard. We're not on a silver standard. It's not backed by anything. It's just a piece of paper. Next, you have your bonds, your fixed income securities. There is little to no insurance covering these investments whatsoever. When you invest in them, you're going to invest at market price. You're going to get a fixed rate of return that is at or below the rate of inflation. And you have to be careful. Some of these bonds, I don't know how many of you out there may have US savings bonds. I know when I was a little kid, the grandparents, for milestone events, birthdays, first communions, things like that, we'd get US savings bonds. Woohoo, a $25 US savings bond that they paid $12.50 for. And that would have a certain interest rate on it that over 30 years, that bond becomes worth $25. Great way to invest if you're looking long term and you want it to be a little safer. But after a certain maturity date, it stops earning interest, and there is no reason to even hold on to it. Again, with a savings bond, you have no asset attached to it. Your equities, your stocks, and your mutual funds, they are not insured. And when you're seeing all of those commercials on TV, trying to get you, join this investment group and we can, this retirement fund and things like that, they will tell you not FDIC insured. You can lose money. When you invest in stocks and mutual funds, you're going to be investing at the market price of that day. What are your returns going to be? Really don't know. Are you investing in stock where they're going to pay dividends? I have stock that they pay dividends, but you know what? Last few quarters, the stocks that I have invested in, some of the companies have chosen not to pay dividends. They can't pay dividends. That's our share of the profits. They're not doing as well as they expected, so they're not paying dividends. Your asset when you invest in stocks and mutual funds is that stock certificate. You own a small portion, a fraction of that company. Depending on the news for that company and what's going on with them, the price can go up and go down. If the stock drops, you're going to lose money. And then if the company goes bankrupt, you're going to see a total loss. About 12, 15 years ago, I invested in a company. I thought it was a great, great buy. What we were going to do is we're going to be putting kiosks in airports. And these kiosks were going to provide Wi-Fi for all the travelers. I thought this was a great idea. People would go up to the kiosk, they would purchase Wi-Fi time. And so I invested some money into it. I'm not going to go into how much, thinking this was a great deal, but I bought thousands and thousands of shares of this company's stock. And then municipalities and the airport commissions and things like that, because most airports they're owned publicly. So those municipalities started to put in free Wi-Fi into these places, or they went to services like Boingo and the things like that, where you could log in and they had Wi-Fi in the airport and you could pay for access to Wi-Fi. And the company that I invested in basically went out of business and I lost my entire investment. That's equities, that's stocks, that's mutual funds. Now, let's get into that fourth asset class, property. This is real estate. And by the way, if you do not own the home you currently live in, that needs to be your number one goal for 2024, is that you purchase. As a real estate investor, you should be owning your own home. You need to, okay? When you purchase real estate, when you purchase property, your house is insured. I know all my properties are insured. I've got insurance on every single one of my rental properties as well as my primary residence. So if something happens to my investment, I have insurance that's going to make me whole when we're all done. I do not invest at market price. I invest below market price, especially in the fix and flip area. You can get great deals on properties where you're purchasing them well below market value, and then you add value to it through your rehab on that property. What type of returns can you get in real estate? Well, the national average appreciation rate for real estate across the United States is 14.5% per year. Now, it's going to vary based on which market you're in, but that's the national average for appreciation of residential real estate in this country is 14.5% per year. Not a bad return on your investment. Also, your asset is tangible. It's property. You can walk up to it. You can sit in it. You can sleep in it. You can have family gatherings at it. You can rent it out to make money for you. You can fix it up and you can sell it, and you can reap the benefits of the increased value as well. Okay. What happens when property values drop? Well, if you own properties and property value is dropping, that you're not going to get what you want when you sell it, you can always turn it into a rental and then you can cash flow it. I've done some fix and flips. I'm more focused on rental properties. I like my average appreciation of 14.5% in the value of my property, and I like the cash flow benefits that I get from it. Also, I get to depreciate the property on my tax returns. So it's my rental properties, I pull depreciation, which helps make those rental properties cash flow even better. And the asset's always going to be in your name. All right. So those are the key differences we have there. So what are the current interest rates? Well, as of April 8th, here are the current interest rates that buyers can get on a 30-year fixed loan. These are the rates your buyers, these are for owner-occupied properties, people looking to buy a home that is going to be their primary residence. Well, the current rate as of April 8th for the VA loan is 6.125%. For a conventional loan, it's 6.99%. For first-time home buyers, it's 6.625%. The FHA rate, as I mentioned already earlier, it's 6%. Jumbo loan, 7.125%. USDA loan, 6.25%. These are the rates a buyer can get for an owner-occupied residence, their primary residence, 30-year fixed rate, and they're based on a 760 credit score or higher. So these are when you finish that fix and flip, you're ready to put it on the market. These are some of the rates that people are looking at right now. So let's take a look at a fix and flip. This loan was funded on a property in Tallahassee, Florida. The purchase price on that property was $91,000. The rehab cost $53,000 and change. Their loan amount was $136,500. The borrower brought $16,000 and change in cash to the table. This was an 11-month loan. The interest paid on that loan was $17,921.54. They were able to sell the property for $280,000, factoring in the cash to close, as well as the interest paid, their carrying costs on this property. Their total profits on this property were $101,781.78 for a return on their cash investment of 298.95%. 299%. That's a much better return than you're going to get on that CD. So that cash that you have sitting in your savings account, let's put it to work for you and earn a bigger return. Let's take a look at another one real quick. This loan was funded in Denham Springs, Louisiana. Purchase price on the home was $73,000. Rehab cost was $69,000 and change. Loan amount $150,000. $16,000 and change from the cash from the borrower. Almost just under $18,000 in interest paid on this loan. The house was sold for $199,000. Total profit to the borrower based on the cash they brought to the table, as well as the carry costs paid for the life of the loan, was $22,725.02 for a return on their cash investment of 67.07%. That's a much better return than people are finding in the stock market, a much better return than people are finding with bonds, and a much better return than you're going to find on that certificate of deposit. Okay. So now that I've gone through all that, what do you do next? Well, it's quite simple. People need a place to live. As I mentioned, there are people out there who need to buy a new home, and you can provide it for them. People are always going to need a place to live, and you can provide it for them. So on the fix and flip market, what should you be looking for? Single family, 1 to 4 unit properties. Okay. We're looking at a single family home, 3 bedroom, 2 bath, 4 bedroom, 2 bath, 1,500 to 2,000 square feet on a lot size of no more than half an acre. And at a value when they buy it retail that is below the FHA cap for your market. The further the below that FHA cap you can bring this beautiful rehab property in to the market, the quicker it's going to sell, because that is the biggest, bluest ocean when it comes to purchasing single family homes. You can also be looking at 1 to 4, 2, 3, and 4 unit properties, because people need rental properties as well. And it's a great opportunity to cash flow there and to build that equity in that property while someone else is paying that mortgage on the property and putting cash in your pocket. Okay. All right, ladies and gentlemen, you're one deal away. You're one deal away. We're all one deal away from something. We're one deal away from retiring that 9 to 5 job. We're one deal away from retiring our spouse and letting them enjoy the fruits of our investments. We're one deal away from making a positive impact in your community. We're all one deal away from something. And here at TN3B Financial, we're poised to help you with that one deal. So don't hesitate to reach out to us. You can reach us at 800-701-6120. That's 800-701-6120. Send us a text message to that number, 800-701-6120. We'll be more than happy to give you a call back. You can also reach us at our website at www.tn3bfinancial.com. That's www.tn3bfinancial.com. All right, go out, make a difference. Remember, you're just one deal away. Thanks for tuning in.